food delivery is a fast-growing business. Case in point, the latest results from DoorDash. The stock has been a hot one. Our next guest sees more opportunity ahead for investors. Nikhil Devnani is a senior analyst in U.S. emerging internet coverage at Bernstein and joins us now. Great to have you with us. So first of all, if people want to get a sense at how DoorDash is scaling, what really stood out to you in the latest quarterly results?
Yeah, look, first off, thanks for having me. It's great to be on. I think there were a couple of things that really stood out to us. First and foremost, maybe most simply, the business accelerated in the quarter. It's not that often that you see businesses of this size continuing to compound and accelerate. And that strength looks like it's continuing into the third quarter as well. So the way they guided for the third quarter looks very strong, both in terms of orders and overall spend on the platform. And I think the nugget that really stood out to me the most was that they talked about strength from new customer cohorts. And why this is interesting is because, as you can imagine, all of us probably downloaded and used these apps pretty heavily during the pandemic. So a lot of people have been introduced to this service over the last 4 or 5 years. The fact that the cohort of new customers coming into these platforms is still growing. And once people come to them, they start ordering more, because there's just so many more merchants to choose from, so many more categories to choose from. Those are all the healthy makings of a really good, well-functioning marketplace. And so that, to me, was really like the standout comment if I think about everything that they offered on the call yesterday.
And Bloomberg was saying that the gross order value for the company outpaced Uber Eats, which highlights some of the growth that's happening with this company, which has gone on a multi-billion-dollar buying spree to boost other parts of their U.S. business. They had the acquisition, meanwhile, of the U.K. delivery company Deliveroo, but they had these acquisitions of a restaurant tech company, an advertising tech company as well. What's your assessment of whether those ultimately are company-enhancing deals?
Yeah, I think the frame of reference here is that DoorDash is now starting to evolve from that food delivery company that all of us know and use to a broader platform for local commerce. That has been the long-term vision for management for a long time now. And that's starting to materialize. A lot of that is materializing in the incremental categories that they're bringing on board. So you can now order groceries, alcohol, convenience items, retail items on the platform. But that's also showing up in terms of their global footprint and global expansion. So Deliveroo, you're right, is an effort to build their presence within Europe in particular. This is the second deal now they've done in terms of Europe expansion specifically. And they're also growing their suite of B2B offerings to build out a broader tech stack and software stack for merchants. Look, I think ultimately the proof is going to be in the execution over the next couple of years as these deals close and come into the fold and they take ownership of these assets. I think what we're looking for from them is that you continue to build these incremental use cases, build these incremental markets. I think a lot of investors focus on market share in particular when they think about DoorDash's efforts internationally. Look, at the end of the day, I think what works in this business is once you get to a minimum viable scale, you can start to have really compelling economics in a given market. And so I think the story now is, can they take this Deliveroo asset in particular, scale it to a level whereby it starts to generate healthy incremental cash flows? Can they realize some cost synergies on the back of consolidation here within Europe, which we think they can? I think that's what we're going to be looking for in terms of mile markers going forward with these deals.
And we'll have about a minute left, Nikhil, but the stock story of DoorDash is an interesting one. And I'm old enough to remember, like, I was at Facebook on IPO day. There was so much hype around the company. As a public stock, it stumbled for a while, but over the long term, really found its groove with investors. There was so much hype when DoorDash went public, had a kind of rocky couple of years there, but it's finding its groove, and your target price for the shares is above where the shares trade today, even though they've had a nice move higher. So what would you say to people who are trying to, they're thinking about these tech companies, whether you can still invest after the run-up that we've seen?
Yeah, look, we have to acknowledge that it on the surface feels and looks like an expensive stock. It's had a big run. But I think it's important to remember also that stocks, good businesses, well-run companies are expensive for a reason. I think what we've seen from them is a real consistency of execution. The consistency with which this business has grown, give or take 20% for 2-3 years now, has been pretty impressive to see. And I think that ultimately, my takeaway from just observing some of these long-standing internet marketplaces over time, or high-performing internet businesses, is that they just find a way to compound, and they find a way to bring in, again, new revenue streams, new incremental monetization levers. I think from here, to get excited about Dash as a stock, you really do have to believe, I think, in the earnings power. This company is obviously getting a lot of credit for the execution they've had.
Right.
Our belief, our thesis is that they're still under earning, even today when you look at the trajectory of expectations for the next couple of years.
Okay.